Is alt season canceled? A lot of people seem to think so. Currently, everyone and their mom seems to be constantly posting on X that there isn't going to be an alt season this cycle, with a lot of people confidently proclaiming that alts are dead and there will never be another alt season again. Some are saying it's because there's too many tokens in the market now. Back in 2013, back in 2017, back in 2021, there were a lot less tokens. And because we have so many tokens today, they're saying that the market's too diluted. And because of that, we just can't have an alt season. Others are saying it's because we need quantitative easing or QE. And until we get quantitative easing, there's just no possibility for an alt season. We have to have QE is what they say in order to have an alt season. And even some are saying it's because Bitcoin has stolen the show. Bitcoin has sucked all the air out of the room. People finally realize that Bitcoin is king. Bitcoin is the ultimate form of money and the ultimate form of currency. And there is no need for alternative assets. There is no need for alternative, technologies in the crypto space. All we need is Bitcoin, and because of that, alts will never have breathing room again. In this video, we're going to walk through all of these arguments one by one, look at the case both for and against having another crypto alt season, and try to answer the question, is alt season actually canceled or is it still coming? And if it is still coming, when should we expect it? Keep in mind, this is just my personal thoughts and opinions about the market. I am not your financial advisor. I am not your father. I am not your brother-in-law. And none of this is investment advice. First off, some of you guys are probably wondering, what is alt season? I've noticed lately there seems to be a lot of confusion about this. Alt season is when other crypto projects that aren't Bitcoin are outperforming Bitcoin, excluding memes. And the reason people are so hyped on alt season is because historically during this season, fortunes have been made investing in alts because they're so much smaller than Bitcoin. So therefore they have so much more room to run up. For example, where investing in Bitcoin, you might be able to do a 2x or a 4x or something like that because it's a multi-trillion-dollar asset. Investing in the right alts, you might potentially be able to do a 50x to a 1000x. Meaning if you invested $1,000 and you did a 50x, that your $1,000 would turn into $50,000. Or if you invested $1,000 and you did 1000x, your $1,000 would turn into $1 million. And again, that's historically. I'm not talking about what will happen. I'm talking about in the past, historically with alt season. It's typically been a season where you have these tiny alts that are outperforming Bitcoin. Most of them aren't doing a 50x to a 1000x. Most of them are doing maybe a 5x to a 10x to, in some cases, 20x. And then like the top tier of alts are doing that 50x to a 1000x. Now, I mentioned earlier that altcoins are something separate from meme coins, and this is actually really important. Meme coins are their own entire category. They run separate from alts. So you could have like a meme coin season where alts aren't doing anything, and you can have an alt season where memes aren't doing anything. Meme coins have evolved to become extremely fast trades. They might go up one day only to collapse all the way back down the very next day. Altcoins are typically much longer term plays. They might go up for months or sometimes years and have proven to be extremely resilient when compared to something like meme coins, with some alts having staying power over multiple cycles. Meme coins are primarily based on attention, and attention can be extremely fickle, especially with millions of meme coins being launched all the time. Altcoins are typically based on fundamentals. There's usually a team or a company building a real product or a real piece of tech, etc. And some of these alts make hundreds of millions of dollars in annual revenue. Some of them make billions of dollars in annual revenue. And as these teams continue to push and innovate, there's always another reason to believe that token could continue to go higher, which is why alts tend to have more long-term staying power. And just to be clear, obviously, this isn't true about all alts. There are altcoins that are just like vaporware. They're nonsense projects. They're like low effort releases by teams trying to do cash grabs. I'm not referencing those. I'm talking about like the real projects building innovation in the space. They're actually like a somewhat solid team. Maybe they failed, maybe they don't. But they're actually trying to build something serious or build something real. That's what I'm referencing when I'm talking about that. Alts historically have been what I call a garden in the crypto space. Average people could get in really early at the very start of a project, hold it for a long time, and then make life-changing gains. And what usually happens is when a project does really well, people that make money from that project will take a portion of their profits and they'll use it to go invest in other altcoins, which then, kind of pumps those up. This leads to a lot of innovation, a lot of experimentation, and a wider alt season where kind of everything tends to flourish upward. And in the process, it tends to make a lot of people a lot of money. However, as the regulatory landscape became more and more hostile to crypto, you started seeing a lot of crypto teams doing a lot less of these like public launches and a lot more private launches where they had VCs come in, they would fund the project, get early allocations into the project, and then the projects would launch at these extremely high FDVs. Basically, the project's launching instead of launching day one at $100,000 market cap or $1 million market cap, it's launching at $1 billion or $10 billion market cap, leaving very little room for the public and the average person to get in and make a ton of money. And at the same time, what you had come along with these is not only were they launching at these billion-dollar valuations, but you had all these unlocks that came along with it. So all the VCs, all the team members, et cetera, that had bought into the project were then selling as soon as they were able to. So usually there was some sort of vesting period. As soon as the vesting period was over, they're able to sell. And so they're selling into the open market. So basically they're dumping their supply on retail. Retail's not making any money. And the price of this token is basically going down only. It was not at all like what early crypto was like. Early crypto, again, public's getting in, they're getting in day one, they're making a ton of money as the project goes up. These projects, only the private investors were making money on day one because they were getting it early before the public could. And then they were dumping on the public when it launched at this really high valuation. It didn't take long for people to figure this out. And this kind of made the whole thing worse because now these projects that were launching at these really high valuations were getting even less demand. So they were going down a lot quicker and again, basically down only. And because people became so disheartened with this and they kind of craved those early crypto day gains, they turned to meme coins because meme coins didn't have all these unlocks. They didn't have these like VCs getting in early. It was fair. It was balanced. Everyone could get in early and then hopefully make tons and tons of money. And at the start, meme coins did act basically the same way that altcoins did. You could get in early on day one and then make a fortune as these things went up for months and months and months. However, because meme coins don't require a real business, they don't require any sort of real innovation, they don't require a real team, you had meme coins start to rapidly multiply. Until soon, there were millions and millions of meme coins launching, and it was as easy to launch a meme coin as it was to make a post on Facebook. Literally today, if you want to launch a meme coin, it takes 5 seconds, and it's as easy as uploading a picture, writing in the name, and clicking launch. And kind of early on in this process, a lot of influencer cabals, a lot of sophisticated market makers figured out how to game this system because it basically is a system based on attention. And these groups would get in really early on a meme coin launch, generate a ton of hype and attention around that meme coin, shoot the price up, and then dump on all of the public. Basically turning meme coins into a much worse version of the very thing the public was trying to get away from in the first place. Okay, so that's my brief history on altcoins and meme coins and kind of how we ended up where we are today in this environment where everyone's jaded, everyone's kind of depressed on X and in the crypto space, and they're like, we're never getting an alt season again. I don't even know why I'm here anymore. This is also depressing, et cetera, et cetera. Now let's get into the data and the details. Alt season has historically happened every single crypto cycle. And it typically comes at the point that Bitcoin gets so expensive, so overvalued in people's minds relative to like the anchor price that it had been at before, that they start to look for alternative places to invest because they feel like, hey, I missed out on Bitcoin. I didn't ride that rocket up to the moon and make a ton of money. But maybe this other thing that hasn't rocketed up as much could end up making me a ton of money as well because it's kind of similar to this Bitcoin thing. So maybe it's going to go up next. And usually this whole process coincides with retail returning to the crypto space. So usually it's kind of like a trickle effect at first. And then kind of later towards the end of the cycle, like you have this mass onboarding of a ton of retail people right before the whole ship goes down. And I've talked about this a million times before, but typically ETH is the one that runs after Bitcoin. So Bitcoin liquidity drips into ETH liquidity, which then drips from the top of the stack down into the rest of the market. And this process usually starts in the final year of the 4-year cycle, usually around January or February of that year. So in 2021, it would have been January or February. In 2017, it would have been January, February. You kind of get the idea. Now, up until the last few months, the 4-year cycle has been playing out perfectly, like to a T, like an orchestrated movie of what we've seen in the past. That's what's been playing out so far this cycle. With the exception of a few minor differences, the biggest one that people like to point out is the fact that Bitcoin hit an all-time high earlier this cycle than it has in previous cycles. And I personally think that actually doesn't matter as much as a lot of people are saying it does. I think that's really explainable by the fact that we had the ETF launches that pushed a lot more liquidity into Bitcoin. And also, if you look at Bitcoin, inflation adjusted, it actually didn't break its all-time high inflation adjusted. We had a lot of inflation in 2021 because of COVID. So it makes sense that maybe, some of that kind of threw that pattern or that piece off. My personal belief was that didn't really matter. It didn't have as much importance as people were saying it did. In my opinion, the point when the pattern started to break and show the first signs of like being a little bit different was kind of during October. Usually we have like an October month where it does really well. We still had that, but it was really late in October. It was like at the tail end of October. And then we really saw the value of that, or really saw the impact of that in November when prices went absolutely bananas. Then, however, in December, things really started to break down from what we typically see, where we typically see Bitcoin rally in December, but price started going down. Also, typically in late December, early January, we see ETH start to show some strength. And usually that's because before Bitcoin's rallying. So Bitcoin rallies up, gets too expensive, ETH starts showing strength late December, early January. We also didn't see that happen. If anything, we've seen almost the opposite, where ETH has shown a lot of weakness compared to Bitcoin. And the third thing is now we're in February and there's absolutely no signs of an alt season. Like so far, we haven't seen any signs of an alt season. Alts have been doing horribly so far in February. So that's the third major difference from what we've seen in past cycles and where this cycle has started to break down and diverge from what we've seen historically. So what are the factors that are holding alt season back? Is alt season canceled? Or can we expect an alt season to happen still during this cycle? And if that's the case, when can we expect it? I'm going to dive into all those things and more in just a second, but really quick. The Obsidian Council is my private research community where I share monthly research, my entire portfolio, buy and sell alerts whenever I buy into a project, and more. We've had projects go up 1,100%, 1,200%. 1,500%, and some much more. I spend a lot of money to access a variety of newsletters, private groups, and more so I can get the best alpha in the market. And I share that alpha with the members of the Obsidian Council. Currently, the Obsidian Council is sold out and closed to new members. But if you want to join next time it opens up, make sure to join the waitlist in the description of this video. In my opinion, there are 4 distinct factors that are holding alt season back from happening this cycle. They're probably not the things you've heard other people talking about. First off, as mentioned, alt season typically starts with a rotation into ETH after people perceive Bitcoin to be too expensive. Basically, Bitcoin gets to a point where like everyone's aware of it, but they feel like they're too scared, they're too timid to invest into it because they're worried it's too high. And so they look for something that's at a lower price to potentially offset some of that risk that they perceive in their head, but also to potentially make those gains that they're hoping to make that they missed out on with Bitcoin. The problem with Bitcoin is it's currently sitting on maybe the most bullish Bitcoin setup that's ever existed. The US is talking about adding Bitcoin to its balance sheet. The president constantly talks about Bitcoin and Bitcoin price. The Bitcoin ETF is absolutely obliterating all previous records. Every traditional Wall Street firm seems to be either buying Bitcoin or in the process of buying Bitcoin. Plus, they have a ton of different products in the process that they're in the process of launching. And I think it's safe to say that Wall Street has accepted Bitcoin with open arms. So basically, there's still a strong case for Bitcoin to go a lot higher than it is today in most people's eyes. And that makes it really hard for capital to drip down into alts. The second factor at the completely opposite end of the spectrum has been memes. And memes have stolen a lot of the attention away from alts that they typically see early on for the reasons that we talked about earlier. The third factor is liquidity and overall macro. Alts and crypto in general love liquidity, and the more you pour into the economy, the more liquidity flowing into the system, the better alts tend to perform. If Bitcoin is highly reflexive to changes in liquidity, then alts are like mega reflexive to changes in liquidity. Or said another way, if alts are a garden, then liquidity is like the rainy season, the rainy part of the year that allows everything to grow up. And right now, global liquidity is a little bit of a mess, and the path forward isn't super clear. Some of that is because Trump brings with him a certain amount of like breaking from the pattern. That's why he was elected to shake things up. He's shaking things up, but not everyone knows exactly what the outcome is going to be of him shaking things up. So basically, alt season wants more liquidity. We haven't gotten the liquidity that we've wanted. And if we were to get more liquidity, we almost assuredly would see the prices of these alts go higher. The fourth reason I believe we haven't seen an alt season yet is because retail hasn't come back in any meaningful way outside of memes to the crypto space. So what are the catalysts ahead and what could potentially spark an alt season? Well, short term, we have 2 major catalysts. And the first one is tax return season. And the second one is the FTX dispersions back to people that had holdings on FTX, both of which are liquidity events. They're putting liquidity into retail's hands that they can go invest in crypto or, whatever. And maybe that's enough to spark an alt season. I think there's definitely a potential with that liquidity event to spark an alt season and bring some attention back to alts. And there's certainly a lot of capital sitting on the sidelines that hasn't invested into alts. And maybe that's enough to kind of cause a domino effect of that capital coming in. That pushes alts even higher. That attracts even more capital. And if it's kind of on the back of like a wider macro liquidity inflection event up, maybe that sparks everything. Speaking of macro, right now the Fed currently seems to feel that we have inflation under control. I'm definitely sitting in that camp that inflation is definitely under control and we're going to be totally fine with that. But right now the Fed is only pricing in 2 rate cuts. And you guys have, if you've been listening to my podcast or you've heard past videos, it's my belief that we're actually going to see more than 2 rate cuts from the Fed, and that's just forward guidance meant to influence the markets in a certain way. But in reality, in 2025, we should see more than 2 rate cuts. That's my belief. And the reason I believe inflation is under control is for a couple different reasons. For one, Trump's policies around energy. So you have drill, baby, drill. You have the desire to want to build out a ton of cheap energy in the US. You have deregulation. I've talked about before how deregulation is anti-inflationary. And so I believe that's going to have an impact on inflation. As well as in general, I just think inflation is on the decline. I think a lot of people like to talk about it. A lot of people like to fearmonger about it because we just went through like a traumatic inflation event in 2021. But I think people are overemphasizing that. I also think a lot of the fear-mongering around tariffs and inflation is also completely overblown, and that's not going to be an issue either. Now that's rate cuts. I've noticed a lot of people, though, haven't been talking about rate cuts as much. A lot of people have been focusing a lot on QE or quantitative easing. I've been seeing that more in the comments. I've been seeing that more on X. I've been seeing that more, just kind of all over the place. And what a lot of people are saying is that we need QE for an alt season. That like, I don't know where they're hearing this or where they're getting this from, but they're basically saying that like, because until we have quantitative easing, until we have QE, we can't have an alt season. So they're like waiting for QE to come, and that's going to be like the liquidity floodgate that opens the door for an alt season. And I think people's emphasis on the need for QE to come into place for us to have an alt season is completely overblown. You do not need quantitative easing. You do not need QE in order to have an alt season. In 2017, we did not have quantitative easing. We had quantitative tightening, and we had the Fed hiking rates. And despite that, we had one of the best alt seasons we've ever seen in crypto. QE is obviously great. Like it's a one liquidity mechanism that allows liquidity to flow in the market. And that's great. And that's, obviously good for crypto and would be amazing if we could have it, but it's definitely not a requirement for an alt season to happen. And that's because it's just one of many ways you can get more liquidity in the markets. There are lots of other ways you can get liquidity injected into the markets outside of quantitative easing. Also, you're probably not going to see quantitative easing until rates are at zero. Like historically, when you have QE, it's when the Fed lowers rates all the way down to zero. And it's kind of like a break the glass in case of emergency kind of thing. Like, okay, we've already done all the rate cuts we can do. We still need to stimulate the economy more. What can we do? Oh, we can do QE. And so they'll do some form of QE to further stimulate the economy, but it's kind of like break glass in case of emergency once rates are already at zero. Now, the only reasons that they would still do QE outside of that, like with rates being elevated, would be if there was some sort of reason to do it. Like, we had the banking crisis, so they'll do things like QE, not QE, right? Where it's like, they won't call it quantitative easing, but it's like fulfilling the same role because of some sort of thing that they got to fix or kind of shore up. Another reason they might do it might have to do with like the 10-year, and like if the 10-year rate gets too high and they need more people to be buying bonds, and they want to kind of like keep the bond market afloat, maybe they start buying bonds and they engage in some form of QE that, again, they probably won't call QE to do that and to kind of fulfill some mission around that. Outside of that, though, it's very unlikely you're going to see the Fed's flip policy towards QE. The Jerome Powell even recently said so himself, that it's very unlikely we're going to see any form of QE until rates are at zero. However, that's not to say we don't have a ton of massive liquidity generation events on the horizon, because we actually do. And the overall picture for global liquidity is actually quite positive looking into the future. And the places I personally think we're going to see this liquidity come from is going to be a weaker dollar, so a weakening of the US dollar, lower bond yields, China stimulating, and overall global central banks easing. And the four of these factors have the potential to be a liquidity tsunami for the markets. A weaker dollar opens the door for liquidity to unlock globally for a variety of reasons, and also allows China and other central banks to be more stimulative in their own economies. A lower 10-year reduces borrowing costs, and when people borrow money, when you borrow money from the bank, that's a form of money creation, because there's not like one-for-one backing for that money you're borrowing. The bank's basically printing money out of thin air to loan to you, not based on one-for-one reserves. And a lower 10-year also historically encourages higher risk appetite when it comes to investments. China right now is going through a really rough kind of recessionary period equivalent to what we went through in the US in 2008. And they would love nothing more than to have a weaker dollar so that they could stimulate more. And right now, that's one of the things they're waiting for. They're waiting for a weaker dollar. When they have a weaker dollar, that's going to allow them to pump more liquidity into their own economy, which bleeds out into global liquidity. And in general, right now, you have a lot of global central banks that are entering easing cycles, and that's good for more liquidity as well. Lastly, we know that Trump wants a lower 10-year rate. He wants interest rates cut. He wants a weaker dollar. He wants markets to go higher. He's enacting pro-energy policies, and he has a really smart team behind him that knows how to get these things done. And actually, one of the things I forgot to mention is the SLR, the supplementary leverage ratio. And that's like basically how much leverage the banks are allowed to have. So after 2008, because we went through the whole financial crisis, really strict guidelines went on banks with how much lending they're allowed to do to avoid us ever having a 2008-like financial crisis. Then in 2020 or 2021, somewhere around then, they did exemptions on this to inject more liquidity into the market because we needed that liquidity really badly during everything with COVID, all the shutdowns and everything. And that expired in March of 2021. So in March of 2021, that ended up expiring and we went back to the old 2008 rules. But lately, there's been a lot of talk about reinstating something like that. Specifically, Jerome Powell, during the recent hearing, talked about making something like that a little bit more permanent. So modifying the current ratio to make it more pro-liquidity in the US. And that could actually be a massive liquidity unlock as well. Overall, it seems like all roads from here lead towards more liquidity. It's not a matter of if, but it's more of a matter of when. Which brings us to the various possible outcomes for Altseason. I did an entire video on this where I talked about, the different directions we could potentially go. My base case has been that we would see an Altseason in February, which would be right now, which we're obviously not seeing. This would be typically during the 4-year cycle when we would see an Altseason, but it definitely feels like the odds of something like that happening are pretty rapidly diminishing. Again, we do still have the catalyst of tax returns and the repayments from FTX. We also have the fact that October started late and went into November. So maybe Altseason starts late too, maybe later in February and goes into March or something. I don't know. Maybe that's possible. Maybe it's not. But if that doesn't happen, if we don't see an Altseason in the first half of this year, where does that leave us? Is it just no Altseason? Is the 4-year cycle broken and everything's done? What would be next expectations? In my opinion, the next most likely scenario would be a late 2025 Altseason. So we don't see it the first half of the year. Instead, we see it in the second half of the year. And that bleeds into 2026. So basically think of October through December, it does really well. And then it bleeds into the early half of 2026. This would be close enough to the 4-year cycle that it rhymes, but not an identical repeat of what we've seen in the past. After that, my third most likely scenario is that we don't see a bull run in 2025 at all. And that in fact, 2025 ends up being the same as 2024, 2023, where in general, the markets go up. They crawl up what's called a wall of worry, where everyone's still kind of making money. Everyone feels kind of bearish. Maybe they're a little bit miserable, but in general, when you look back over the year, you're actually, I made money and I made more money than I thought I made. That's what happened in 2024. Everyone was bearish. Everyone was miserable. But when they looked back, if they held, the whole year, as long as you didn't buy in February at the market height, you ended up making a lot of money. And if you bought early 2023, and held all year, you were miserable. There's all these bad things that happen in the markets, but you ended up making overall a lot of money. So my third most likely outcome would be that 2025 is the same as that. The markets crawl up a wall worry. Overall, people are making money, but they're bearish. It's kind of miserable. And then maybe we have a 5-year cycle for the first time, and we see that play out in 2026 as liquidity peaks up and maybe we get some more momentum on that front. What I don't see happening anytime soon is a crypto winter nuclear sell-off like what we've seen in 2018 and what we saw in 2022. I don't see that happening without first having a frothy market run up like what we saw in 2017 and what we saw in 2021. I've talked about this before, but those periods come from that frothy, high leverage, really, unhealthy period that happens during a bull run, right? You have a lot of people maxing out their credit cards, putting their entire life savings into crypto. You have a lot of leverage that enters the system. The market overall becomes really, really unhealthy. And then of course, if it goes way, way up, really fast, it's going to collapse back down, which is what you see happen in 2022 or what you saw happen in 2018. You're not going to get that nuclear winter sell-off without first having the run-up that comes before it. That's a cause and effect kind of outcome. And so I'm not worried about this massive sell-off happening anytime soon, not until we have the massive run-up first. Lastly, there seems to be this wide-held belief that Altseason can't happen this time because there's too many tokens this cycle. I actually think this is an incredibly poor argument, and that is the exact opposite. The vast majority of tokens that have come into existence over the past 2 years have been meme coins. And when I say the vast majority, I'm talking 99.9999999% of all new tokens coming into the market have been meme coins over the past 2 years. That's because, as I talked about earlier, platforms like Pump.Fun make it so easy to launch a meme coin. It takes 2 seconds, and it's basically the equivalent of making a Facebook post. This is just kind of a fundamental law of life, is that if something's really low effort and easy to do, a lot of that thing will get done, versus if something's really hard to do and takes a lot of effort, a lot less of that thing will get done. Now, if you exclude meme coins, of the tokens that remain, a huge swath of those tokens left over are going to be dead tokens from past cycles, Ponzi's, a lot of, again, low effort projects. They came to market, maybe at the height of 2021 or the height of 2017. They're basically cash grabs to make a ton of money. So you had these devs that really didn't know what they're doing. They spun up some code, they threw up a website, and it was just a cash grab to make a ton of money. It was really low effort. I call them vaporware projects. You're going to have a lot of those, and really only a really tiny sliver of the overall slice of tokens is going to be altcoins that have fundamentals, that have utility, that have real teams behind them, building some sort of real product or some sort of real innovation. I'd argue with an ever increasing supply of tokens, the need to actually filter tokens towards fundamentals increases as well. Meaning it's my belief that we will absolutely get an alt season eventually. And just like previous cycles, not every token in the market is going to, run up during alt season. And anyone that's been around in crypto for quite a few cycles is going to understand how this plays out. In 2013, it was like the lowest effort garbage that passed as an altcoin. In 2017, the altcoins that were hitting the market were a little bit better. They had maybe a little bit different ideas, a little bit better ideas, but still the majority of them were garbage. There was only a couple, that maybe were somewhat decent. In 2021, the altcoins that ended up gaining attention and capital were head and shoulders above what we saw in 2017. They were actually doing things. Some of them were actually making money. A lot of people were actually using these things. The bar was raised for where capital, was wanting to go. And yes, even in 2021, there was a lot of tokens that did not get any capital, poured into them. It wasn't like every altcoin went up. There was so many tokens that were being launched that didn't go anywhere. They just kind of sat there. But broadly speaking, the ones that were above bar, were above, what the market deemed to be like worthy of capital, those broadly speaking had tons of capital flow into them. And that's what alt season really is. Every season, the bar is raised for what gets filtered out and what gets left in. And this season is going to be no different. This next alt season is going to be no different, where it's not going to be every altcoin, every token in existence that's going to have money pour into it, but only those that are good enough for capital to be allocated towards them. And I've actually sat down and put in hours of work trying to figure out how many of these types of tokens there are. And it's a really difficult job to do. It's really hard to filter out all the garbage and the nonsense. But my best guess is somewhere between 3,000 to 5,000 tokens. There's somewhere between 3,000 to 5,000 different crypto projects that are actually building something real, innovative, or at least attempting to do something real and innovative. And that actually makes a lot of sense if you think about it. If you're actually in the space and you think about all the projects that are, doing things, it's not like, all of startup culture and the whole world is building in crypto. Actually, a lot of the builders got knocked out during crypto winter with all the SEC stuff, the regulation. They got scared away from that because the SEC was suing everyone and their mom. And you also had a lot of the projects that were launched in 2021 that ended up dying. The teams ended up going under. They lost all their capital, their money, and they left the market. So you had a lot of tokens leave the market, especially those low effort tokens that were just money grabs. You didn't have an abundant amount of capital come in. In fact, you had, again, more teams leave because of the SEC pressure and the regulatory picture. And so it makes sense that it's somewhere between 3,000 to 5,000 tokens, 3,000 to 5,000 different projects. They're actually within that realm of what I'm talking about. So when I talk about alt season, I'm talking about those 3,000 to 5,000 projects. I'm talking about those ones that are actually trying to build something, bringing it all together. My belief is that alt season isn't canceled and that it isn't dead, but in fact, it's inevitable, and that we will absolutely eventually see an alt season. Crypto is disrupting the idea of money and finance itself, one of the core, foundational things that everything else is built on top of. This kind of disruption comes maybe once every century or once every millennium. As I've said before, it's my belief that crypto will eventually be $100 trillion sector, and that we're just getting started. As always, none of this is investment advice, and you should always do your own research. Crypto is obviously insanely risky, and you could definitely lose money if you don't know what you're doing. Make sure to sign up for my free weekly crypto newsletter. It's mostly just all my content I put out each week in an easy email so you don't miss it, but occasionally I drop some other cool stuff in there as well, including sometimes I mention things I'm buying before I ever talk about it on my YouTube channel. Also, if you really want to dive deep, make sure to check out my weekly podcast, the 1 to 1 Million Podcast. I interview projects, talk about the markets, and interview various traders and experts in the crypto space. If this video is helpful, make sure to hit that like button. If you have any questions or comments or anything to add, let me know down in the comment section below. And if you want to see more videos like this, make sure to hit that subscribe button and the little bell next to it to be notified each time I release a new video. Thanks for watching, and I'll see you next week.